This is our Forex blog for March 19th, 2012. And like most days, we want to buy the strong currencies versus the weak and sell the weakest currencies versus the strong. We have the real-time strength or weakness on the top, which is made up of 5 of our best statistical trend tools. This is one of the easiest ways for new traders to trade. And 3 of these tools measure the direction, 2 of them measure the intensity of the direction. So when you see incredible weakness followed by less strength, usually that weakness is going to continue, especially if the daily and weekly trend are down, which it is. One of the strongest ones today was the pound. You wanted to trade that against the dollar when it had a lot of weakness here. Later on, the yen, against the Australian, and so forth. So let's take a look at the pound versus the Australian. Now this is a new tool I'm developing that measures support resistance areas. At 5 o'clock right here, it showed a lot of strength, and you basically at that point are looking to buy the pullbacks. You get into this little pullback right here, and it went from 60 all the way up to 20 here, 60 pip move. You might have got out of your trade right here with a small 15-20 pip profit, bought again, got out during this sideways, and then bought the last one here. And if you bought this pullback here, more than likely you broke even or lost 5 or 6 pips. This should be released in the next week or two. Which is kind of a replacement for our daily trend, which is a lot more sophisticated. It measures whether support resistance areas are broken. So if the pound's breaking all major resistance areas, it's very strong. And if the dollar is doing likewise breaking support areas, then buying the pound dollar is a good trade. In this case, this was the pound versus the Australian. The Swiss also was a weak one today, so you could have traded the pound Swiss on the long side. And notice our new tool started showing incredible strength in this particular pair at 5 as well, and it was pretty much strong until 11 right here. At that point, you're starting to really focus on sells, and even earlier on, it pretty much had no trend strength at all as it's going sideways right here. And starting the day off, you're really looking to buy pullbacks, breakouts. You might have bought this little pullback right here and got out with a small 10-15 pip profit, bought this breakout, and it exploded up to 54.60 and went up 30 pips or so. A lot of people like to trade using range charts, so buying the pound versus the yen also makes sense. Let's take a look at this one on a range chart. Here's a 6 pips per bar range chart, and it's really clear what to do and how to trade when a currency, you're not using time-based charts, you're using pips. So every time it moves 6 pips, there's a new bar, unless there's an economic news event sometime during that bar. Some bars, due to economic news, can be bigger, but the vast majority, 99% of the bars, are 6 pips. And basically you can use our trailing stop to get you in and out. You're in this trade right here at 23, out at 74 for a huge 50 pip win. And typically I wait for at least a 15 pip pullback. So this one from 85, I would have really started looking for buys only from 70 and underneath. If you bought right here, you had an 8 or 9 pip loss. You bought again right here, you have a small win. And typically if this does take off again, it's going to go up to the fib target of this last wave, which you can see it did. This last pullback trade right here, typically you're going to want to put your stop underneath the low and kind of wait for it to hit the fib target, or you can just keep scalping it and make 10, 15, 20 pips, 20 or 30 pips. But this is a great place to get out if you trade at 06. It would have been in this trade around 60 for a nice 45 pip win. If you're trading the strongest currency versus the weakest, you have incredible edge versus some of the other traders out there. The CAD was weak all day. Let's take a look at this using one of our new tools, the pound CAD. So this started showing extreme strength at 3 o'clock, even before this one actually even broke out. Anything hitting the 10 level on this is one that you really want to aggressively buy pullbacks or breakouts. If you're an aggressive trader, you might have got in there, or you got this little pullback right here. But there are plenty of trades to the upside that were pretty much predicted hours and hours before. This one just was going sideways, but the pound was extremely strong using our support resistance statistical tools. That's what this tells you. If it's breaking through major resistance areas, if pounds are just carving through areas where there should be some selling and it should stall it, that's very bullish for this currency. And you can see all the trades you have here, pretty much a break even, maybe 5 or 10 pip win, small win, 20 pip win, and of course 50 or 60 pip win in the last one. And even when you're trading some of the strongest currencies, you're going to have a lot of small wins and some big wins, but eventually the trend oftentimes ends, right? So you pretty much broke even on this one. And then as it's going sideways right here, you're waiting for it to break out. It's very possible you might have got into the trade right here and lost money. But let's scroll back and look at this as it's going sideways here. All right. So you bought that trade right here. This is the first time the momentum dipped under the 10 level, pretty much since 2 in the morning. So it's a pretty big head start that you're going to get stopped out on this. And a lot of times when real-time momentum ends, currencies go the opposite direction. And this new tool is also going to show us what individual currencies look like. So instead of just the pound CAD itself here, let's just put in the star USD, which is our synthetic dollar. And you can see it had you selling the dollar all day long. And you can ignore the currency on the top here. And if you duplicate this and put in the star GBP for pound, you'll see pretty much 5 o'clock, the pound was extremely strong, 7 o'clock onward. And so you want to buy the very strong pound versus the weak dollar from 7 o'clock onward especially. Let's bring this up here. Notice 7 o'clock right here. There's a lot of resistance there. 200-day moving average, previous week's high. It breaks out. It goes from 60 all the way up here to 90. It's a 30 pip win. Again, wait for at least a 15 to 25 pip pullback. If you use our trailing stop to get in here at 68, you're out here at 88. And I'm going to finish class by just reminding you, this little 20 pip move right here is twice what you need per day to do very well trading. We have a trade analyzer planner in our software, and if you click the planning tool, if you have a $2,000 account, you're getting 10 pips per day. Remember that last trade we just showed there had 20 pips. You're pretty much doubling your account every 2 months. You can see after 8 weeks, it's almost 4,000. Another 8 weeks, 8,000, 17,000, and onward. So as you trade and your account grows, you're obviously trading more lots. At the end of the year, your account has grown massively. It's 130 times bigger than it started, and you're also trading 51 lots at a time versus only 4 mini lots in the beginning. But the point of this is, and some traders get to a point where maybe 10, 20, 30 lots per trade, they hit their psychological limit. You may not be able to psychologically trade more than 30 lots, even if your account allows you to. But the point is, you don't need too many pips per day to do very well trading. Even if you grew your $2,000 account part way through the year to close to 50, most people will be very happy with that, and you're still only doing 9.3 lots at a time there. And your goal per day under this method is $929. So a lot of people will be happy with that on an income basis. Obviously, we're talking hypotheticals here, but the trade analyzer planner shows you that 10 pips per day allows you to do amazing things with your money. Again, so if you bought this breakout right here, or if you saw it coming up to the major resistance here, 200-day moving average, previous week's high, and you bought that breakout right here at 61, and you got out of it even here at 76, that's 15 pips. That's a day and a half minimum profit with just one trade. So I'll finish class by showing the range chart on the pound dollar. And again, this is a 6 pips per bar chart. And notice how it's kind of coming up to this resistance area. It breaks out. You only had about 6 pips. You get this beautiful pullback right here. And deep pullbacks like this, right to a major support area, you're in this trade right here at 66 and out at 93. So that's about a 25 pip win as well. 2.5, that's a half day's or half of a week's minimum profit right there in that last trade using our tools.